Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. I like to simplify my trading as best as I can, and I've been always helping the beginner trader from day one. I actually learned more from the beginner than I have from the experienced traders, because it was the beginner that always wanted to ask the questions, and it made me have to look these things up. I was like, one of the first ones to have a chat room back in 2007. And we were all new. We were all beginners. And I was just a little bit, I just had a little bit more experience, but not much than when the chat room started to open up. So I created a chat room to get a bunch of people together and learn how to trade. And been in a lot of chat rooms, had a lot of ones myself. But we're going to talk today basically about my strategy when it comes to the moving averages and on how I use them moving averages in different time frames and how I can find trades, how I can stay in trades, and how I can exit ideas with those moving averages. So basically I called the reversal in the market. I wrote a song about this here, about the month to remember. September was the month to remember. And we went ahead and we bounced on up and broke out of that resistance off the 200 SMA. Now I use the 200 SMA quite a bit on any time frame, even the 1 minute time frame. I find it very useful. So that's basically what I wanted to go through, was the 200 SMA and how I use these other ones that go along with it. I have the 200 SMA in orange. I have the 250 SMA in green. I have the 63 EMA in red. I have the 21 EMA in 21, the 21 EMA in white, and then I have the 9 EMA in blue. So back in September, we jumped on this trade. We had 3 black crows with an inverted hammer with a spinning top right off the 200 SMA, and she went ahead and broke on out and run it right up to the 63. Now the 50 was a resistance level until we broke it with the 1, 2, 3, the 50 SMA. So you could run that all the way up. Once that 9 touched that 21, that was a great exit idea. Chart patterns. We had an inverse head and shoulders here on the bottom of that candle. So we snake, breakout, pull back into an inverted head and shoulders with the right shoulder. So you could have took that trade and then respected that 9. Now the 9, this is a strategy, put it down on paper. The 9 crossed over the 21. Both of them are EMAs. Once that 9 crossed the 21 and respected that 21, it went ahead and bounced on up and had a very nice run to a shoulder line of this head and shoulders. So that's the right shoulder right there from this head and shoulders, which was an exit idea that formed a bull flag, and then we had another breakout. So the different time frames that I use, that's a good question. I got them all down in here. I've got a 20-year yearly candlestick pattern. Stay above the 9, you could have stayed in that trade forever. We got a monthly time frame, 15-year monthly, each one of these candlesticks representing a month. Now we have the 50S, we have the 200 right here. Back in 2011, 2010 we were at the 200, and then back in 2009 we were below the 200, same as 2008. So the 50 SMA, a lot of your hedge fund traders will stay in the trade if it holds up the 50 SMA. or they'll add on to their positions. They're long-term traders, so they wait for it to hit the 50 on the monthly. I also have the weekly time frame. This is where we cut the trade off the 200 back in September. I'll use that weekly quite a bit. If we break a resistance or if we break a support that goes down, I'll go to the weekly, I'll go to the monthly, and I'll go to the yearly, just to see what the next support level could be or what the next resistance could be. Then I've got the daily. Whoops, that ain't the daily. Then I've got the daily. We bounced off the 200 here. We stay above the 9, and we find ways to get into the trade if it pulls back to the 21. Now this is something that I've learned here in the past year. I'll look at a time frame, and I'll say, okay, where does that candlestick, what moving average does that candlestick rely on the most? You know, where does it hold support at? And you can tell right here, for about 5 or 6 months, you had plenty of times to take that trade off the 21 EMA. All a bunch of times. Once you broke that 9, and it didn't last long, these are on dailies, was a great opportunity to take that trade. Had a guy come to me a couple weeks ago and said, Jim, I can't believe it. I started doing the 9 and the 21 crossover like you said, and I got in the put when the 9 crossed down over the 21 and ran it all day long. For example, you got the 1 minute time frame here. Let's get to the 1 minute 5 day. You got the 9 right at open here. This was yesterday. We had that big breakout. So the 9 respected, the stock respected that 9. And then all of a sudden, the 9 started to drop down below the 21, and the thing became bearish. And then the 9 crossed the 21, and it came back up. And then it crossed down and hit that 200. And I called this trade out. I said, watch this. We got couple big old candles bouncing off the 200 on the 1 minute time frame. And we hit that 1, 2, but 3 times, and it bounced off that 200. And each one of them, like, you get in the 200 and you sell it up here at the double top and get out of the trade. And these, you know, these contracts you're talking 40, 60, 70 bucks a contract in a matter of 20 minutes, maybe more, maybe a couple hundred on the SPX. I really love trading the SPX when it comes to the moolah. So the next time frame, after we look at the yearly, the daily yearly, we bounced off the 200. We had the 9 over the 21 crossover. Both 9 and 21 crossed over the 50 and the 63 and became bullish. As long as you stayed in that trade above the 21, you were fine. Now, this is how I called this trade out. And notice one other thing. You got that 63 acting like a resistance and a support level right here. Now notice one thing here on the weekly. This is how I called the trade out for the reversal. We had 3 black crows land off the 21. So I told the room, I said, hey, the 9 is our support. If we breach below the 9, we could have a support. The next support level will be the 21 EMA. And I called this out with confidence. No one else called it out. I couldn't see nobody on CNBC, Schwab, none of them. I don't think they look at chart patterns. We have 3 black crows with a harmonic candle. Then we had a dragonfly, and now we're still bullish. So we nailed this bottom right here off the 21. And that is on the weekly. So the next time frame I use is the hour. And I've got these in 2 different time frames. I got it in 90, just in case the 20 dips below and there's no other support. I can go to the 90, and also got the 4 hour on here. So we'll put the 4 hour. The 9 crosses the 21 EMAs. We break above the 63 and the 50, and then they all cross the 200, and we stay in the trade to the 63 all the way up to the top on the 4 hour time frame. So every time this SPX hit that 63 EMA, it bounced. It bounced. And then we broke down. The 9 crosses the 21, jumps over the other two moving averages, and runs down and hits the 200 SMA and forms an expansion pattern. If you can count to 3, you can trade with me. 1, 2, 3, boom. 1, 2, 3 for an exit idea. Staying in that channel using the 4 hour time frame. Now we got the 1 hour. I got it on a 90-day, and I got it on a 20-day. So here we go on the 90-day. We respect the 200. We respect the 200. We respect the 200. We respect the 200. And then we have a bull flag, and it turns into an expansion pattern. And if you can count to 3, you can trade with me. 1, 2, 3. 1, 2, 3. Boom. That's an expansion pattern. So now the 200 becomes a support level. So if this thing pulls down to the 200, that's a pivot point. That's a pivot point. A pivot point. I call it a PP. Anything above that is bullish. Anything below it is bearish on any time frame. Any time frame. So that's the 1 hour, 190 day. Then I got the 20-day 1 hour. Same thing. Snake, breakout, pull back, boom, to the 200 exit idea. The 200 became a resistance level. Resistance level. And then we broke the resistance. So now we got to hold the gap. We got a gap. We got a gap. Along with the 200 SMA. This thing can pull back and be a very strong buy at the 200 SMA and stay bullish. You go below it, you're bearish. Then you count to 4, you might make a little bit more. So that is in the 1 hour time frame. Note, again, the 9 crosses the 21, crosses the 50, gains respect above the 63. Now the 9 crosses down over the 21, so that's an exit idea to get out of that trade. Then she reverses back up. The 9 crosses over the 21, over the respected moving averages, and now we're very bullish in this trade. But we are at a resistance. 1, 2, 3. 1 hour time frame. Then I probably should use it more, but I don't. I'm custom using, I've got different time frames. I got the 5, 10, and 15 minute on here. But I use that hour probably over these other 3 and the 30 minute. So I got the 5, 10, 15, and 30 minute. When I'm looking at the weekly, I'm getting ready to take the weekly. I want to know where support is, and I want to know where resistance is, and then I trade that channel. Using the same moving averages, the 9's keeping me in the trade. If we breach the 9, then I've got to rely on the 21, and we know that the solid port so far has been this 50. So somewhere in here, and then we got that gap. So we got a solid support right there, and I draw me a little price line across there. Maybe set my alert above the 63, because I think it could go down and hit that 63, and I'll be ready for the trade. And I'd set an alert above each moving average, and I'd put a note in it like set me alert, and I'd say above, let's say the 21 EMA on 30 minute. Then I may have a reference tool to go back and check that trade out. When the alert, it's triggered. So I trade off my alerts. When I set my alerts, I set alerts on almost every chart I look at that's bullish. Then we got the gap in here. So this would be my second support with a candlestick right there, a wick. And we got a triple top breakout. 1, 2, 3, boom. So that would be a solid support right in here. I'd set me another alert, and I'd be ready for that trade, for it to pull back. Same note, what a gap. I'll just type in gap on gap on 30 minute. Gap on 30 minute. So the next, and then, you know, get accustomed to what time frame you want to trade with. The blessing about the market is you can take any strategy and develop it yourself. It doesn't have to be the exact strategy I have. Like if you wanted to use the 5 minute, the 10 minute, or the 15 minute, or the 30 minute, use that and then follow what moving average it likes the most. 30 minute, 90 days. It likes to say you're a swing trader. This is a 90-day. So I really want to know what's the best time to get into this trade if I wanted to swing it. As long as you respected that 200, which is a pivot point. A pivot point is the centerpiece of resistance levels and support levels. So you got in between here is your pivot point. You got 3 resistance levels, a pivot point, and then 3 support levels. So as long as you hold that 200, you're in the trade. Now the 200 acted like resistance here. You're bearish. You're bearish. Once it breaks above, you're bullish. Once it breaks below, you're bearish. So that's a pivot point. Anytime this stock pulled back and hit that 200 on the 30 minute, I'd almost want to take that trade and go long with it unless it broke the 200. So you got the 5 minute. A lot of traders trade off the 5 minute. Now I can't find any patterns on the 5 minute. I just have to rely on the candlesticks. On the 1 minute, I'm able to point out patterns. They're easier to find. For example, I got an inverse head and shoulders right here. This is a perfect time frame for me. It gets me in the trades before everybody else. It's more easier to read because it forms patterns. And I trade off patterns. You know, I can't explain how easier it is to trade off of a pattern than it is a candlestick. So I'm sitting in here calling this trade out first thing in the morning. Each time frame that you get into will move these moving averages around and they won't be the same. So here on the 5 minute, I can't find a real good spot to get into this trade. Maybe this inverse head and shoulders that barely shows right here. But on the 1 minute, I'm able to identify a lot of patterns. And we bounced off the 200 right here. So we came in here and I shorted the stock and we hit the 200 and I was so blessed. I was worried about this trade yesterday. And we bounced off the 200 and we created new highs. So this trade alone, we had 3 black crows off the 200, off the 200, off the 200. So you were able to wait patiently on the 1 minute time frame and catch each one of them trades off the 200 SMA. We had 3 black crows right here. And then we bounced off the 50 right here. But both these were excellent scalp areas. Like get in this one, run it on up. You had a shooting star, which is a bear flag to get out of that trade. We had a doji right here, and then a blue star. Now it's time to get out of that trade and take that profit. That was an indicator to get out of that trade. You know what I'm saying? You're in this scalping this trade. You're scalping it. And you get a knock on the door. Hey, Jim, I got a snake here, man. Will you check it out? I said, what are you talking about? Yeah, it's pulling back. Can you help me out here on this trade? I said, yeah, let's look at it. So we bounced off the 200 previously, and we had an inverted hammer, which was an exit idea. Inverted hammer, which was an exit idea, and it pulled right back and created another hammer. Now this was a bullish idea, but when it came back and hit that 200, you couldn't take the trade because it happened so fast. But you know that you previously hit this 200 and you bounced up and scalped it on this inverted hammer that's heading downtown. And then you got that candle and I go, oh, that's a bullish candle right there, man. And it came back again and hit that 200. And you jumped in the trade and you get a knock on the door. And I said, Jim, that was the fastest $100 contract I ever made in my life. We had soldier after soldier after soldier after soldier. And then when I saw that shooting star, I decided to get out of that trade. And by gosh, if it didn't pull back again to the 200 SMA. And here I am again, man. We got a snake, Jim. I get a knock on the door. I said, what? Yeah. I said, so I drew out the snake. And I said, you know how to count to 3? And the guy looks at me and said, what the hell are you talking about, man? I said, yeah, can you count to 3? I said, I'll try. So we got 1, 2, 3, and we break out off the 50 with 3 white soldiers. And we break out. I never say take the trade. There's that inverted hammer again. There's that inverted hammer again. And we had 3 black crows landing off that 200 SMA with a hammer. So now we created what you call snake breakout, pullback, respecting that trend line. I never tell people to take the trade here. I'm going to pull a Joe Biden on you. Hey, once it breaks out of the snake, wait, I've got this thing rigged, man. It's going to pull back and respect that trend line. I said, Joe, man, stay out of my business. So it pulls back and it hits the 200, and I decide to take the trade, and she runs on up. I get a knock on the door. And I said, damn, Jim, I just made $600 a contract on this trade, man. That was a beautiful execution. It held the 21 all the way up, and I got out of the trade once it broke that 21. Thank you so much. Then I realized I forgot that the 9 didn't cross the 21, and we had another extension to the upside. I get another knock on the door. Sammy calls me up and says, Jim, I counted to 3, and I got out of this trade. What do you mean? Yeah, I said, I took it off the 200, and I was able to count to 3. And when that happened, I just took all the profit from the very top. You're a blessing in my heart, Jimmy. I went ahead and took that triple top and got out of the trade. I bought it off the 200, snake breakout, pull back, boom. So that's how, use the moving averages, learn how they respect each other from the candlesticks in summary. And I guarantee it, you'll see yourself shine. Memorize chart patterns. So I'm bottom of this snake. I get a knock on the door and said, Jim, I forgot to take that trade down there off the 200. What do you think? I said, buddy, you're still good. Man, we got an inverse head and shoulders down here. There's your left shoulder, your right shoulder. And as long as we respect that trend line, stay in that trade, man. Stay in it. Boom, baby. I get a knock on the door. Jim, I sold it. And then I had it head and shoulders up here. I decided to go ahead and get out of that trade once it popped up to that right shoulder. And then, by gosh, if it didn't respect that other shoulder line down here off the inverted head and shoulders. So I got a head and shoulders with an inverted. I hit that trend line and I jumped back in the trade, and I was out of that trade in 6 minutes. I made $120 a contract. I had 10 of them. Thank you. That's $1,000 in my pocket in a matter of 6 minutes. And I realized to get out of the trade because I started seeing these dojis. I said, I'm getting out of it, and I'm going to call it a day. That means the buyers have stopped, the sellers have stopped, and we're just thinking about what we're going to do next. And it's getting closer to the end of the day. So I'm getting ready for power hour. And then I come in. I'm on the 1 minute power hour. I get a knock on the door. Jim, we pulled back from that 1, 2, 3, and I got a double bottom down here off the 200. Should I take the trade? What do you think? Are you feeling bullish? The market's real bullish right now. Hell yeah, I am. There's another $300 a contract by the end of the day. You're in at the double bottom. It's all about chart patterns, moving averages, and being in the now. So I'm sorry this took a little bit longer than expected. I just wanted to kind of help you out when it comes to trading these moving averages. And again, we're going to do a little summary of everything. How effective is the 200 SMA? I'd say it's pretty effective. I'd say it's pretty effective in no matter what time frame you're in. I use it in the 1 minute. Nobody uses it in 1 minute, but I can find trades more than anybody else can on that 1 minute using that 200 SMA. For scalping, day trading, swing trading, I'm going to use a bigger time frame. It's going to tell me if the stock's bullish or bearish. If you're below the 200, you're bearish. You're above it, you're bullish. So all this time, I'm going to put the song that I wrote back in September because I was flabbergasted that we were going to run up and have a killer run. And we did. Remember, there's chart patterns in here. As long as you can read them chart patterns, there's an expansion pattern. There's an inverse head and shoulders. There's a head and shoulders. There's a pullback to this trend line, to this Darvis box, to this head and shoulder. See the head and shoulder? See the head? Left shoulder, right shoulder, breakout. 1, 2, 3, boom. Pulls back and hits that shoulder line again. Bounces up. Chart patterns, moving averages, and being in the now. I hope this makes a difference in your trading. Summary, moving averages, the 200 SMA, the 50, and then the EMA 63, the 21, and the 9. This is the sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And have a great day, and I love stocks. Vegas, this is a shout out to you. I love stocks, and I'm going to give a shout out to Zach Morris. I think he's a very decent man. I have the total utmost respect for him. And I have a shout out in what he's been through. And I have a shout out to all you retail traders that are learning. Just what you got to do, you're going to have to kick a couple habits. You're going to have to break a couple hobbies. Still love your family, but dedicate yourself to learning how to trade, and you can become successful. If you don't dedicate yourself, you're going to be a freelancer. You're just going to be a half-assed trader. Get in there and do the work. Build you a strategy. Take pieces from everybody and build you a strategy that fits your personality and your mindset and the way your schedule is. And have a great day. Retail traders.